Okay, this is Nick Friedman, and I am one of the co-founders here with Trash Butler. I'm going to go ahead and record this webinar so I can run through relatively expeditiously what we're going to be talking about here as far as the investment opportunity and the business opportunity in general. So I want to kind of kick it off giving a little bit of background on myself and my business partner. Really the purpose of this slide is just to kind of establish the fact that this is not our first rodeo, or we're not de novo entrepreneurs, so to speak. Omar and I started another business about 13 years ago called College Hunks Hauling, Junk, and Moving, which now has over 100 franchises around the country, does over $100 million in annual revenues. And that model is more of a transactional business-consumer model, but we'll talk about why this Trash Butler opportunity is very exciting for me and something that I'm looking forward to being a part of. Also on our team is Dave Magriso, and he's actually one of the founders of Valet Waste. He was with that company and really instrumental in growing that company to over 400,000 doors under contract before he left there and before they were further acquired most recently actually they were acquired for over $500 million most recently. So again, kind of not our first rodeo. We've got this original sister company that we had started that provides local moving and junk removal services. Trash Butler started about 5 years ago, and that's what we're going to be focusing on here in this presentation as well. Now, the industry that Trash Butler is playing is very fragmented. I've got a slide in a little bit that just shows how fragmented this industry is. It's extremely top-heavy. Valet Living, which is originally known as Valet Waste, is the industry leader. They service about 1 million doors. We're the second largest player in this space, currently servicing about 40,000 doors. So there's a big delta there, big gap to make up. They were most recently acquired by Ares Capital and Harvest Partner Funds for over $500 million, and at the time they were servicing about 750,000 doors. So a big opportunity and a great position that Trash Butler is in currently as the second largest player to be that national provider. The things that I love about this business that we didn't have in our first business that we really cut our teeth in, this business has recurring revenue. It's a business-to-business sales model, 3 to 5 year contracts. It's asset light, a very fluid staffing model, and there is a disruptive technology component to it that makes it a platform technology business to really gain market share, prevent other would-be competitors from catching up, and also hoping knocking down the incumbent Valet as well. And, of course, we've got proof of concept. We've got track record. There's about a $4 million revenue annual business today, and certainly a very extensive experience of the founding team. The business model is pretty straightforward. It's literally 5-night-a-week doorstep trash pickup. The apartment residents, as an amenity, open their door, put the little plastic container in front of the door, and one of our butlers in his uniform in this leak-proof Santa Claus sack basically picks up the trash and transports it to the on-site compactor or disposal container on the community. The benefit to the residents is obviously as the amenity. The benefit to the communities is going to be a cleaner community, a marketable amenity to promote in their materials, less turnover, but also an income producer, because let's say we're charging $10 a month per unit at each community. The apartment complexes will build this into the rent at, say, $25, $35 a month, and it becomes a net operating income producer with the cap rate that'll help improve the overall value of the community as well. We're a very service-focused brand. We are going to, and we have gained our business market share already in this short period of time through our reputation. So here's just one testimonial from one of the founding partners of Avesta, which is now InvestRes, where we service about 3,000 of their doors. And it just talks to not only the integrity of our management team, but also the service that we provide from a Trash Butler perspective. We've got some great examples of clients who have switched to Trash Butler from Valet Waste or Valet Living, and are speaking volumes about the difference in terms of that experience as well. We are a nationwide business. We are the only other national brand that can provide this service in all 50 states. We're currently in about 26 states, and this is a testament to our experience scaling a national service brand in our prior business venture with a decentralized labor force and with a focus on client experience and client service. So this will give us the ability to have a conversation at the portfolio level with the larger players in the industry, in the multifamily industry, for us to gain their portfolio work, not just going off regional or local targets. As far as what we're going to raise capital for today, it's going to be, number one, continuing to grow our sales team in quality and quantity. There is a bottom-up and top-down sales effort, which I'll talk about here momentarily. We obviously want to continue to scale our operations and leadership to make sure we can deliver on that growth of service. Continue to develop our tech platform, make sure that can differentiate and scale with the business. We will look at some inorganic competitor acquisition and then a small recapitalization of some existing senior debt on the business, some bank debt. So I mentioned top-down, bottom-up. Most of our activity, we've got about 5 sales reps currently. Most of our activity is at the regional property management level, going bottom-up. But with myself and Dave, and we are looking to bring a national account developer on board as well, what we are doing is having conversations at the enterprise portfolio level. So the owners, the decision makers, the folks that can basically say, yes, we want to have this second player in the space, alternative to valet. You know, they've told us already in some of the meaningful conversations we've had that there is, you know, for every service they use, whether it's electrician, whether it's painting, whether it's their actual trash compactors, they have choices. But nationally, up until today with the Trash Butler, they've only had one choice. Now they've got Trash Butler, and that's creating a very big upswell in our pipeline as we look to bring on more national accounts. From a tech perspective, there's kind of 3 layers. There's the Butler management layer, where we can actually get notifications when the butlers are on property. They can upload photos and report back their activities. We can track their activities. There's a property management interface where the management company can get reports and updates for noncompliance activity of the residents, you know, if they're putting out too much trash, for example, or if we are if we notice anything suspicious on property, or we notice a light bulb out, we can provide those reports electronically back to management and interface with their existing platforms, as opposed to having to create a separate login or anything of that nature. And then lastly, there's a resident element, which is the notifications, for example, that the butler is on his way, reminder to put your trash in front of the door, and a notification after the butler's picked up this trash to remind you to go ahead and bring it inside. So that helps align the interests of everybody involved from a convenience standpoint. As far as valet waste story, they exited when they were roughly about our size to a big national waste company called Oakleaf. Oakleaf was then sold to New Mountain Capital. Then Oakleaf was sold from New Mountain to Waste Management, and they held on to valet waste and sold that separately to Aries and Harvest. And that was a sort of imputed value of $600 per door under contract at their time of sale. So very much like a SaaS model, software as a service type valuation or technology type valuation, because of the multi-year contracts, because of the footprint in the multifamily space. There's a strategic sort of value booster to this business and this industry. We are obviously, with this raise, looking to formulate a formal board of advisors, which are going to have clear ownerships of areas, for example, competition, technology. We already have that multifamily development expert in Dave Magriso with his relationships in that industry. I forgot to mention that Dave also happens to own a LED lighting company that currently still works with multifamily. It's actually the largest LED lighting company, Onyx Energy. So he's got a lot of relationships both at the regional and national level from multifamily. And we think this is a ripe opportunity to get in the disruptive waste technology space. There's a waste broker out there known as Rubicon that just got their $1 billion valuation with their latest raise, and it's all because of the technology that they've been able to develop. And we feel that Trash Butler has the same potential here in this doorstep pickup space. So just some quick kind of snapshots of the industry and the fragmentation. As I mentioned, I was going to have a slide that illustrates this. Valet currently services about 1 million doors. This slide's a little outdated. We're closer to 40,000 doors today. The next one over is actually Invisible Waste. They were just acquired by Valet Living. And so there's really maybe only a small handful about our size or slightly smaller, and then probably a long tail of mom and pop companies that might be able to handle or keep up with 5 or 6 communities, or 5 or 6,000 doors, 10 to 15 communities. But eventually they're going to run out of capital to be able to support and sustain their growth. So we're in a very good spot right now. Valet has made some acquisitions over the years, including a technology platform called SureMate in simple terms, and then, of course, some other doorstep providers as well. These are just some industry statistics about the multifamily space to show that it is a very much growth space. Over 600,000 new units will be added here in the next 5 years, and so certainly the demand for an amenity differentiator and the expectation, quite frankly, from residents of this amenity is going to lend itself to Trash Butler having a foothold in there. And then just as far as why we're raising capital today, we could continue to self-fund this business. There are some client acquisition constraints that make it pretty cash intensive to grow this business, but we could continue to slow play this business and grow, and without any injection, we'll be at a $20 million contracted revenue here in the next couple of years. With financial injection only, just some capital to help fund the client acquisition and operations, CapEx growth, we could be at $35 million. But if we could get some great strategic partners, folks that could plug us into some of their communities, but also make some of the strategic relationship introductions that would help really take the ceiling off of this business, and there's really no cap to what this business can grow to as far as unit count and enterprise valuation. So that was a very rapid run through. I'm happy to jump on a call and talk through some of these points and slides in more detail. We do have a 5-year pro forma that kind of maps out our trajectory and game plan. And right now we do have a private equity group based here in Florida called Florida Funders that is going to likely take the lead investment on this initial Series A round. They're going to commit roughly $2 million, and we're going to probably fund another $2 to $3 million from strategic friends and family or strategic partners to participate through the Florida Funders vehicle that they're going to be setting up and managing on behalf of this round. So I look forward to catching up soon. Thank you very much for taking the time to review this, and we will be looking forward to our further conversations.